Do you know your options if you can't pay your taxes? My name is Andrew Bosserman, and I'm a tax attorney and founder of Boss Tax Law. And in this video, I'm going to discuss what your options are if you can't pay your taxes. So, say you get a letter from the IRS in the mail saying you owe them hundreds, thousands, tens of thousands, maybe even hundreds of thousands of dollars. What are your options? So, before we get to the options, one of the first things you'll want to do is to pull transcripts from the IRS to get a complete view of your tax situation. Transcripts are simply IRS records, kind of like bank statements or other, statements you might get from, bank or investment accounts showing everything the IRS has in your account. So when returns were filed, when tax payments were made, if any penalties or interest were assessed. This will give you a complete view of your tax situation with the IRS, how much you owe, penalties, interest, but also might provide opportunities to maybe reduce some of the debt. Maybe there's a penalty you can get abated. Or maybe the statute of limitations is actually coming up on, collecting the tax. But let's assume none of those apply and you're left with an outstanding tax debt. What are your options? So first, you can always pay the balance you owe in full. So that might be obvious, but if you're able to do that, oftentimes that's the best situation because you will avoid additional penalties and interest accruing. There are certain penalties, such as the failure to pay penalty, as well as interest. Oftentimes they keep running until your tax debt is paid in full. And with interest rates being, higher than they have been over about the last decade, it's often, cheaper to pay your debt in full if you're able to, rather than to keep accruing penalties and interest. But oftentimes, individuals and businesses can't full pay their tax debt in full. So we have to look at different payment options or payment relief from the IRS. One of these types of payment relief is an installment agreement. And in an installment agreement, it's similar to paying back a loan. You talk with the IRS and you get to pay your tax debt off over time. The benefit of this is that you get to pay the IRS back over time. It reduces some penalties, but interest will still accrue. So what's good is that they won't, start putting liens on your property or trying to levy your bank accounts or anything like that. You get all that collection action stopped and you get to pay them off over time. But you will still have to pay some interest on that. There are different kinds of installment agreements depending on how much you owe and how much you can afford to pay. Generally, if it's under $50,000, it's pretty easy to get set up an installment agreement. Over that, it might be a little more difficult. Sometimes you have to provide financials. Sometimes you don't have to provide financials for amounts over $50,000. It just will depend on the situation. If you're able to fully pay off your tax debt by the statute of limitations, which is the IRS has 10 years to collect back taxes from you, then it's not too difficult. But if you can't, you might qualify for what's known as a partial pay installment agreement. You'll have to work with the IRS and disclose financials to figure an amount you can pay. And once the statute of limitation hits, then the IRS writes off the rest of the balance. This is often a great deal because you don't have to pay your tax debt in full, but you will have to show the IRS your financial situation and, negotiate with them to come up with a payment amount that works. So that's a quick overview of installment agreements. But say you're looking to, you owe a lot of tax debt and may want to settle it for less than you owe. It's kind of like, debt settlements where, you might owe 100,000 and maybe the bank's willing to take, a fraction of that to settle your debt. It's similar with the IRS. The process is called an offering compromise, but it's much more formulaic than just negotiating with the IRS and coming up with an amount you can pay. Essentially, you'll have to disclose your financials to the IRS, your both your assets and liabilities. So, everything you own, houses, cars, investments, along with liabilities, your mortgage, any credit card debt or other types of debt, and then also your income. And the IRS looks at a formula, calculates kind of like net equity, meaning how much of your assets could be used to pay off the tax debt, plus income over a certain period of time, and then a lump sum amount is calculated. And if you did the calculations properly and the IRS accepts them, then you can settle that debt for less than you owe, whatever that calculated amount comes out to be. That is known as a doubt as to collectability offer in compromise, meaning you can't afford to pay your tax debt in full and want to settle. There are actually other types of offer in compromises as well. Doubt as to liability, maybe you don't think you actually owed the taxes. That's in that situation, that's a little different than the collectability analysis. There are also some situations where you might owe the taxes, but it would be unfair for you to pay. There aren't too many situations that qualifies for, but there could be extenuating circumstances where, hey, I have the money to pay off the tax debt, but I'm going to need it because I need it all for my retirement, or I have some big medical bills coming up. Those are just, examples off the top of my head, but it's possible to get an offer in compromise approved that way. But in summary, you have to run all the numbers, see what works best for you. But offers in compromise are generally, a great tool to consider if you can't fully pay and want to try and settle with the IRS for a reduced sum. The third option we're going to talk about is called currently not collectible status. And this status essentially, if you qualify for it, the IRS will put a notation on your account saying, hey, the taxpayer isn't able to pay anything at this time. We're going to cease all collection actions for the next year or two. And this, you can only qualify for this if you truly can't afford to pay any money towards your taxes currently. The IRS often will look at your financial situation, but say you truly can't afford to pay anything, the IRS says, okay, we're not going to be able to collect anything from them. We'll put collection actions on hold for a year or two and revisit their situation. But this is a great alternative if you truly can't afford to pay and don't even want to try to settle. It's good. The downside is that penalties and interest keep accruing on the debt. If you happen to come into a windfall or find a job making more money, you might have to start making payments or pay back the tax debt. But there's no pause in the statute of limitations. So oftentimes, if you're close to that 10-year period running out in your tax debt, you might want to try currently not collectible status to delay any collection action until the IRS isn't allowed to collect anymore. But it might also make sense in other situations. So that's the third option, currently not collectible status. The fourth option we're going to talk about is bankruptcy. So bankruptcy is an option to wipe out debts, and this can also include tax debt as well. So there's a misnomer. You may have heard that tax debts are not dischargeable in bankruptcy. That is not true, but taxes have to meet some very specific requirements. I'm not going to go into all the details, but tax debt, must be old enough to be discharged in bankruptcy. And also you must have filed a return. There's some other requirements in terms of timing, how long it's been since the tax was assessed. There couldn't be any like fraud or tax evasion. But if you've filed your returns and the tax has been assessed for a number of years, it may qualify for discharge in bankruptcy. So don't let someone tell you taxes are never discharged in bankruptcy. They can be sometimes. So if bankruptcy is a solution you might be pursuing because you have other debts you can't afford to pay anymore, then that could be one way to resolve your tax debts as well. So I could dive way deeper into a lot of these topics, and maybe I will in a future series of videos. But I just wanted to give these basic overview of options you have if you can't pay your federal taxes. If you are in a situation where you owe tax debt and aren't sure what to do, feel free to reach out to me. I can help you investigate your tax situation and create a plan for you to get out of your tax debt so you can get back to living your life and pursuing your dreams and not thinking about, whether the IRS is going to come and knock on your door to demand all their money anytime soon. So, like I said, feel free to reach out, and see you in the next video.